All right, so guys, we want to do the last tutorial set question. All right, so that is the tutorial set question 3. All right, if you have the question printed, this is what you will see. But if you have the question in a soft copy, you see this thing that is here. If you expand it, if you drag it down, you realize that your question that you have printed has an omission of sundry expense of 800. All right, so that is that. But we are going to solve it as it is on your printed paper. Okay, so that is how we are going to do it. Because in exams, you solve what is in front of you. So let's make it as you printed it. All right, so this is as you printed it. And so this is the question that we have. All right, will it affect the balancing? Yes, but our balance sheet will still balance, okay, because expense is double entry. So because this one would have appeared in our P&L, and it would have also appeared in our balance sheet through our net profit. So if it is not there, doesn't mean it won't balance. It will balance. It's just that somebody who has that 800, his balancing figure will be different from we that we don't have. But at the end of the day, the total balancing figure that we put in double lines should be the same. I will show you a shortcut for you to know whether your incomplete record is right or wrong. And when I show you, you can actually go and apply it on all the questions that we have solved so far. All right, so that is that. So let's go ahead and solve this question. The Ama Rambo question that we have. Ama Rambo does not keep records well, so the tax authorities have requested that she submit proper records for income tax assessment. Ama Rambo reviews that the following receipts and payments were made during the year 2021. So all these are receipts and payments, all right. Then, as you can see, it says that the Ama Rambo is certain that apart from the drawings made from cash, all receipts and payments has been recorded. All right. So he also discovered that she reduced goods which cost 500 from the business for her friend Kennedy. Here in Kennedy. You see. All right, for as a birthday present. So the ladies, you see, Afia gives birthday present. So please, the ladies also give birthday present to Kennedy. Say, the guys. Discount allowed is this, and discount received is also 770. Customer made a return of goods worth 2,500. So this is like returning what? And also 1,250 worth of goods were returned by the business. So that is like purchases returned outwards. So we have the assets and the liabilities given us. So that is that. So the opening ones are here. All right. And the closing ones are here. Now, as we go along, I will show you something because this question has a little bit of trick inside this figures. The trick in here is particularly about your fixed assets. Now, my good friends, let's say I have fixed asset that is 10,100 at the beginning of the year. All right. By the end of the year, it is 10,000. What do you think has happened for it to reduce like this? Your guess is as good as mine. There is depreciation, is that not it? But you see, the question never told us, but you should see it. This one too, the same. All right, there is depreciation. And these are the things that you learn in the end of year adjustment. Okay, so I told you that you do that end of year adjustment. You should see it. Okay, so it has reduced. So there is depreciation in here, not mentioned, but it is there. All right, so that is that. Okay, so we will go ahead and try and solve the question. So the first step we learned in doing this is what? Step 1 is to prepare our statement of affairs using our opening figures. All right. Statement of affairs, and we are doing it as at. So this thing is in the books of Ama Rambo. All right. The name is dangerous. She's a Kumasi person by all means. As at January 2021. All right, because that is the beginning. Okay. So here we list all our assets and we deduct our liability so that we can get the opening capital as easy as that. All right, so let's do that. So we have our assets. What are our assets? We have motor vehicle, which is 10,000, right? 100. This is it, the opening one. Then we have furniture and fittings. And that gives us 5,600. We have stock in trade. Another name for that is trading stock, right? We have 3,750. We have expenses, so nothing is there. So we go on to do sundry debtors. Even if there was something there, it should have been a liability, right? Sundry debtors is 2,570. Then what else? Sundry creditors, that is a liability. Wages accrued, a liability. Rent prepaid is repayment, is an asset, because you have the right to receive your money back, right? So how much is that one? 100. Then we have cash. So cash is 2,350. So what I need to do is to add all these things up. So when I add these ones up, what I'm getting is 24,470. So 24,470. All right, then we less all our liabilities. So the liabilities, we had sundry creditors, right? Sundry creditors, 875. Then the owings, we have wages accrued. And the wages accrued is 220. And that is it's like 1095. So my opening capital will now be equal to, if I less this, it's 23,375. So 23,375. All right. So that is what we have. Straight, we go to our cash book, right? That was our step 2. So let's do our cash book. And this one, there is no bank, so we use one column. All right. So this was an asset, so balance brought down. Not an overdraft. So balance brought down is 2,350. That is what we have. Then we go to our receipt and payment. So all the expenses, they made motor expenses, 1,002. They made rent, so rent paid, 500. Wages and salaries, that is 4,000. Then there was what? Cash paid to suppliers. So suppliers, we pay suppliers, our creditors, 27,800. Then what happened? We also received cash receipts from debtors. So debtors is 37,650. All right. Then what else? Advertisement or advertisement. So 1,450. Then we have rates. So rate is 1,004. Were we giving balance carry down for our cash? So let's go and check. Yes, we were. So balance carry down. You see, I've left a little space. All right, which is 1,650. So if I total everything, which side do I think will be greater? So balancing of an account. If you look at your figures, I guess is this side is greater. So you just look at the figures, you will see. And the total here is 40,000. 40,000. And therefore, the difference is drawings. Because the question said they did drawings on cash. It didn't give it to us. It says that it's setting apart from drawings made from cash, but it didn't give it to us. So now we found it, and it is what? 2,000. Now, if somebody has this same question with this the figure that is here, you see when you scroll down, you see it here. You would have added the 800 as part of your expenses, okay? Then it means your drawings would rather be what? 1,002, all right? So, but like I said, we are solving what is in front of us, what you have printed, all right, in your various classes, all right? But if you see someone's own questions the same, but the 800 appeared, don't worry at all, right? It doesn't really change our balancing figures. It's just that in the course of the process, it will change our drawings. I mean, that is that. By the end of the day, it balances. All right. So that is that. Let's go on. So this one tells you that in your cash book, what is supposed to go to your balance sheet when you do your balance sheet, your balance brought down will still be 1650. All right. So I'll show you the shortcut to know whether you are right or wrong. Okay. So that is that. So now we have done with our step 2. Let's go to our step 3. What do we normally do with our step 3? The control accounts, right? So we have to do the debtors control account. So sales ledger control account or the debtors account, all right? Then we will do the purchases as well. So purchases. Let me write it starting from here. So let's say purchases ledger control account. Please, you can write creditors account. Okay, it's the same thing. All right. Now we all know that this one has a debit balance. Yeah. All right. And we know that this one has a credit balance. That's why it is called purchases or creditors. So this is what we have. Now let's go and fish out what we have, our debtors balances. So that you know, this one is about your debtors and this one is about your creditors. All right. So let's go and pick our opening balances. So you see here, the debtors, the balance is 2570. Okay. Then the creditors, what do we have? 875, right? All right. What are the things that will reduce our debtors figure? Of course, you should have certain things like return, discount allowed, bad debt, cash receipt. All right. So right here, we know we received money from our debtors. So receipts. We have 37,650. So once again, by double entry, remember when we were doing our cash book, what did we do? We debited the figure. So you see corresponding credit. That's how double entry works. The same thing, this one, the suppliers to, there is payment. So you have to do payment. So that one too is by bank, right? Or cash. And how much did we receive? 27,800. All right. So that is that. It reduces our figures. Okay. So now, what else do we have apart from this? The question told us that there were some returns, right? And discount allowed. So here we have discount allowed. How much is the discount allowed to customers? 1020. All right. Then the discount received for this one was 770. All right. So that is that. Then goods return inwards. Return inwards. How much do we have here? Customer return 2,500. Then this one we also return outward. We also return how much? 1250. So that is how you see it. All right. Now, if there was bad debt, you would have brought bad debts. Okay, so that is that. So now let's balance off the account. We were giving balance carry downs. All right. So don't forget balance carry downs. For the sales debtors figure, what was our balance carry down? All right. So balance carried down is 3, for the sales is 3,570. 3,5, oh, 3,5, not 3,7. 3,5. Very soon you will learn the error for the name of that error. All right, 3,5. Then the creditor is what? 1,240. Since we have our balance carried down, it means any difference therefore will be our sales. So let's balance it up. So let's balance. All right. So what will be our balancing figure? So let's add this side. We have 37,650, right? Plus 1,020 plus 2,500 plus 3,570. And that gives me 44,740. So if I now take this one from this, I'll get my credit sales. I told you that assuming this side, the difference is supposed to be here. That is your cash sales, all right? Don't forget that, okay? You may get a question like that. So this one is your credit sales. So if I less 2,570, my credit sales is 42,170, all right? So that is what makes the balancing possible. Then let's go to this side. All right, if I add all these things, then it means it's likely that I'll get credit purchases over here. So I have 27,800 plus 770 plus 1,250 plus 1,240. So that gives the total here 31,060, 31,060. If I less the 875, then it means my credit purchases is 30,185. So that is what I have. All right, so basically that is that. So this one is done. The next thing we are supposed to do is about some expenses. All right, what are some of the expenses we need to create an account for? So the expenses, let's look at the expenses that appear so plenty. We have these expenses: rent paid. Do we have rent issues here? No. So we will keep it once. Wages and salary 4,000. There's another wages that are accrued. So wages are accrued here. So let's create wages and salaries. Wages and salaries. So wages accrued, we have wages accrued. So remember what we learned in the part 2 of incomplete. Owings brought down. This expenses, so owings brought down, because the owings makes it a liability, so it's at the credit side. Owings brought down is 220. Right there we have owings carried down to, which is 320, right? Now, even with this one, you see that there has been increase in a liability. In the beginning, I had an owings, which is 220. At the end, I have an owings of what? 320. That should tell me that in between, I have incurred additional expense of 100, which I have not paid, all right? So that is that. Now, let's go to the wages and salary account. You see there's 4,000 here. So this 4,000, once you credited your cash book, so cash, all right, 4,000. This is your corresponding debit, okay? So basically that is that. Don't forget, if they were prepaid brought down, you'll be here. Prepaid carried down will be here. So now, if we close this thing up, it means that I have 4,320, 4,320, telling me that what should go to my P&L, let me change the ink. What should go to my P&L will be the difference, which is 4,100, right? So this one is the value that should go to my P&L, all right? So take note of that. Then we have another expense. I saw another one, which is rate, right? So let's do for rate as well, because these ones has opening balances. Let's do for rate as well. So we have rates. But for rates, we have prepaid. So it will be prepaid. If you prepare an expense, it's an asset. All right, you have the right to collect your money back. And prepayment, being an asset, is a debit balance inside this expense account. So prepaid brought down, all right, is how much? 100, right? Right there, you saw prepaid carry down, which is how much? 150. So it tells you that this guy has done an additional prepayment here. But in the cash book, we credited rates with how much? How much? Rates, 1,004. So here, cash rates is 1,004. All right. So if I'm doing my balancing, then here will be 1,005. Then it means what is going to my P&L is the difference. And the P&L will be 1,350, right? So that I can get 1,005 here. That's it. So that is that. Just to confirm. Yeah, so that is that. Okay. So we've done for all these things. Then it means that the next thing is to prepare our income statement. Okay. So that is our step 4. So we are preparing, we have who? Ama Rambo. Income statement, that because that's the requirement of the question, right? Prepare this income statement. So income statement for the year ended 31st December 2021. All right, so let's do this. So we have, okay, can make it 2. All right, so we had our sales that is coming from our workings. What? 3. What was our sales figure? Let's go and pick it up. 42,170. So the credit sales 42,170. 42,170. But remember, as we were taught before in final account, there is return what? Inwards. So return inwards. How much is the return inwards? Where are you? Return inwards of 2,500, right? So let's do that. 2,500. So you can do this. All right. So the total here, how much does it give me? So I have 42,170 minus returning was 2,500. I have 39,670. Then we start less cost of sales. What do you normally do? Opening stock, right? So what is our opening stock? Opening stock in trade is 3,750. Then you add purchases, right? So purchases. How much is our purchases? Let's go to workings 3. Purchases was how much? Where are you, Mr. Purchases? 3185. So let's do that. So 3185. Then return outwards, right? How much did we return out? So return outwards is 1250. So 1250. So how much do we have? So that is 3185 minus 1250. That gives me 28,935. All right. So that is what I have. So if I add it up, I have 3750. So that makes it 32,685. Then I less drawings, goods drawings. goods drawings. So we are told that he withdrew goods of 500. So goods drawings. So minus 500. That gives me 32,185. This is called cost of goods available for sale, right? So we've done that. Then the next thing to do is to less our closing stock. So let's less closing stock. So closing stock is how much? 4570. So minus 4570. You see the way I've kept the figures on my calculator and I'm using? So 27,615. All right. So that gives me a gross profit of how much? So I will do 39,670 minus answer. So that gives me 12,055, right? 055. That is what I have. Then discount received. The discount received. Discount allowed is this, then the discount received is 770. So 770. That's another income. So plus 770. That gives me 12,825. So that is what I have. Then it's time for us to less our expenses. So let's less the expenses. From here, we know that there is depreciation. Be careful. Be careful and spot that, because this one was 10,100. At the end of the year, it's 10,000. What will only cause your fixed asset to go down is depreciation. So that is 10,100 minus 10,000, giving us 100. Okay. Then we have the F and F. So this one was for motor vehicle. Then we have the F and F. So that one too was 5,600 and it is now 5,400. All right, that is depreciation of 200. Be careful to spot this. After you've spotted this one here, let's go up and do all our expenses. So we have motor vehicle, motor expenses, sorry. So it's motor expenses. That is 1,002. Then we have rent paid. That is 500. So you see, if we had done the 800 in the cash book, the 800 would have come here. But this is what we have, and this is what we have. So wages and salaries is next. But wages and salaries, we did an account for it, right? And how much do we have? So in our workings for wages and salaries, where are you? So wages and salaries is 4,100. Then rent was 1,350. So wages and salary 4,100. Then rates, that is rates, sorry, 1,350. 1,350. What else haven't we done? Advertisement, right? So advertisement. Advertisement is 1,450. All right, so these are our expenses. All right, so let's add them up. Let's add them up. We have 100 plus 200 plus 1,200 plus 500 plus 4,100 plus 1,350 plus 1,450, and this is giving me 8,900. So all my expenses 8,900. So that is what I have. All right. So please be careful. Is there anything that we omitted? That's it. All right. So this one makes my net profit goes how much? Minus 825. All right. Oh, yes, we have omitted some. I just remembered. You remember there is a discount received, discount allowed. We've done the discount received. We didn't do the discount allowed. All right. So that is that. So you two always be careful, right? The discount allowed. How much was discount allowed? Discount allowed. Discount allowed. Discount allowed is 1020. So 1020. So before we had 8,900, right? So 8,900 plus 1020. That makes it 9920. All right. So that is that. All right. So before I just total, let's just look again. All right. So yeah, there is one here. You see, another thing, sundry expenses owings, because owings are, so this is how that account will be. Let's do the account. Anything that is in your opening balances should have an account for that. So if you were to do the owing, this one, you see all the things that are always here, we need to do an account for. So there is this one. All right. So it would have gone like this. Owings. The name of the expense is sundry expenses. So that's the name of the expense. Yeah. So that is where the 800 that is taking off the question. So this one, it just shows us owings carried down, which is the owings carried down being 300. That is what we have. So it means that what will go to our P&L to make it balance is also 300, so that the thing balances. All right. So if we had done the 800 in the cash book, we would have brought it to 800. So what would have gone to our expenses is how much? Like 800 plus 300, 1,100. But like I said, since we are solving what is in front of us, then it means that we need to do this part and add it to our P&L. We have sundry expenses owings. All right. Owings. It's very tricky that you may forget some of these things. So be careful. All right. So that is 300. Because the fact that we, by accrual concept, we will record a thing that has been incurred. All right. Not only those ones cash and cash has been paid for it. So this one has been incurred. We owe it. So it's part of our expenses. All right. And I think I've explained it before that if you owe rent of, let's say, 10,000 and you pay 8,000, you can't say your only expense for the year is 8,000. There is an additional 2,000. It's just because you have not paid. So with that 2,000, you will debit your P&L and you still take it to your balance sheet as an owings. All right. So that is that. So now we had 8,900 before, right? 8,900 plus 1020 now plus 300. So what this is going to give us is like 10,220. That is what I have. Now, if I take that 10,220 from 12,825, what do I have? I have 2,605. All right, the person who has the 800 involved would have reduced this thing further to 1,805. Yeah, something like that. But we didn't do it, so it doesn't change our figures. So this one is net profit. That's our net profit. Then the last thing we are doing is to do our balance sheet. Okay, so let's do our balance sheet. You see, this question entails some lots. So Ama Rambo. And we have balance sheets. You can also write statement of financial position. This question said we should do a statement of financial position. So why not do that? So Ama Rambo, statement of financial position as at December 2021. So underline nicely. All right. Then you have your costs accum dip, then net book value. All right. Okay, so we have the fixed assets. So fixed assets, so let's put our currency signs. Fixed asset, we have motor vehicle. And we know that the motor vehicle started with 10,100, right? So 100. And when we did the depreciation, it was 100. So at the end of the day, we have 10,000. Then we have F and F, furniture and fittings. So this one is 5,600 and depreciation of 200, making this side to be 5,400. So then what? 15,700, right? And here is 300. So you have here to be 15,400. All right, so that is what you have. That is what you have. So this side too is just like doing another statement of affairs. So you see, we pick this asset, and normally what do? We add current asset to, right? So that is how you test whether you are right or wrong. So here we have closing stock. So stock, the closing stock. So the closing stock is what? Stock in trade, we have 4570. So we have that. Then what do we have again? We have the debtors, right? So sundry debtors. Sundry debtors, balance is 3570. Nice rhyming. Then what do we have again? We have prepayments, right? So prepayments. Our prepayment is rates and it is 150. Okay, so we have that one too. Okay. Then we also have our cash. Cash is 1650. So when we add these four, oh, why? I think, yeah, my machine is freezing up, right? That's good. So 1650 plus 150 plus 3570 plus 4570 gives me 9940. So that is what I have, 9940. Now, with this, I need to less current what do you call it? Current liabilities. So technically, I'm lessing my liabilities. In this question, I don't see any long-term liabilities. So that statement of affairs, you see, this one is another statement of affairs. So we are lessing our current liability. So you can do a statement of affairs for this one, and that should tell you your balancing figure. You have to. So just as you use this one to do a statement of affairs, you use this one to do another one, and that should be your balancing figure. All right, so you can use that to test even before you end the question. So current liabilities, we have sundry creditors. So sundry creditors, how much do we have? 1240, right? So 1240. And all the owing stuff. Okay, so how many owings do we have here? We have wages owings. The wages owings is 320. Then there is a sundry owings too. All right. So I think my machine is delaying small. Let's wait a little. Let's wait small. So the wages owings is 320, right? Then we have sundry expense owings, which is 300. If I total all these things, I have 1240 plus 320 plus 300. That is 18 1860. So that is what I'm taking out here, 18660. Now, if I take the 1860 from my 9940, what I'm going to get here is 8080. So what will my balancing figure be? That should be equal to my statement of affairs if I had done for the closing figures. All right. So again, we have to wait small. So if I now add it to my 15,400, it gives me 23,480, and that should be my balancing answer. Yes. So it's like I've done a statement of affairs. So let's find out, how do we get this? Financed by, let me change the ink. Financed by opening capital, right? Opening capital. That's the first thing we did in our workings one. So let's go up and fish it out. This machine is becoming slow. So a little patience. But I wish I remember the figure. Was it 23,375, something like that, right? Yeah. 23,375. I remember. Yeah, so we will do that. So if you can do 23,375. And our net profit was how much? So let's do that. 23,375. Okay. And our net profit, we add our net profit, which I honestly don't remember. Then we will less our drawings. The drawings, don't forget, we had 2,000 in our cash book plus the 500 they did in inventory. So we'll be less minus 2,500. So let's wait small. When the figures appear, then we add it up. All right. So let's just check on our net profits. Where are you? Net 2650. So let's add 2650, 2605. Okay, 2605. That those errors, be careful, you can make them too. So 23,375 plus 2605 is giving me 25,980. All right, I think it will balance because the 500s will reduce this one to 480, and 2 also reduce the 5 to 3. So, ladies and gentlemen, that is it. All right. So, but you can actually do the statement of affairs with these figures to know how your closing balance figure should be. All right. So that is that. So you see, even without the 800, it doesn't really change anything. The reason is that if we had done the 800, our profit would have been how much? Reduced by a further 8. This profit would have reduced, so it would be like 1805. But our drawings too would have been 1,002. So that is it. All right. So, ladies and gentlemen, this is the balance. All right. So thank you. This one has taken quite longer period because it had many, and these are the kind of questions you should be careful about in your exam. All right. So have a great day. We see you on our next topic. All right. Bye-bye.